Hi, and welcome to The Trade. Great to be here with you. What we're watching this hour, a lot having to do with the yen, of course. The yen jumped versus the dollar. BOJ intervention, question mark, should be there. We've got the New Zealand Central Bank saying the economy evolving as expected. But all roads lead back to rates, bonds, and the rhetoric coming from the U.S. Fed overnight. And don't forget, U.S. earnings. We saw MasterCard profit beating, consumer spending defying inflation worries, and that, goes back to what we're hearing from the Fed. So let's bring Nick Twidale, Chief Market Analyst at ATFX Australia, into the program. And also joining me is David Scott from City Index. Nick, hi.
Hi.
Nice to see you. Guys, can we, and by that I mean you guys, really talk about the yen and what we're seeing there? I mean, absolutely extraordinary moves. And big question marks whether this is BOJ intervention. Nick?
There's huge question marks across the market and still haven't had any confirmation. Certainly haven't had any confirmation from the MOF or the BOJ. And the strange thing is not really from the market. Normally by this time there's some scuttlebutt that they've come in. Now I think there's probably been rates being checked at times, but they're huge moves. And a lot of guys out there at some of the big trading desks are saying they're not seeing too much in these moves at all. So there's a lot of talk of robots, of algo traders that are just jumping on momentum because the market's been so prepped for this, and that could be what's going on. I'm stuck in the middle now. I really did think, the initial move after it went through 160 was intervention, but there was just no confirmation. So it's going to be very interesting when we see the next month's data come out, but that's not for another 4 weeks, right?
You kind of alluded to it, but who do you think was behind that big push in dollar yen? Because that was the thing that triggered it. There was no move, no subsequent move in rates, which we know is really highly correlated with dollar yen. Are there players out there that are big enough to go and move things around like this?
I think, and if you look at when we're having these big moves, they've come in holiday thin markets.
Yes.
So the initial one that took us up through 159 and then through 160, and I think it printed as high as like 24 and a half above 160. There was talk of stops. There's always talk of stops in the market, and they would be up at those levels. And if you look back at that chart, that 152 was the original line in the sand. Then we threw a 155 in there, and nothing happened. And it feels like they came in. But if it was they're just trading on thin air, it will come down as quickly as it goes up. So there's a lot of talk that's what really is making these moves at the moment. And there's such a high level of machines trading at the moment, and they do trade once volatility picks up, that we're seeing extended moves. We've just seen a 70 or 80 point rally in dollar yen this morning, and that was probably just on some right hand side fix, which would normally take it 15, maybe 20 points at most.
All right, look, we're not going to solve that problem right now. When it comes to the Fed last night, less hawkish is what the market is interpreting that to be. What moves did you see in FX that confirmed that for you?
I think with the Fed, I think they kind of missed a bit of an opportunity. We were all fairly well prepped for them to be a bit more hawkish, and I kind of think they should have. So, to be frank, it was kind of like they had a penalty and then just back passed it to the goalie and sort of wasted a golden opportunity. I think we're going to see dollar start to appreciate again. I think some of last night's moves in FX were influenced by that massive move in dollar yen. So the dollar came off like 0.5, I think, on the index, but a lot of it was contributed via the dollar yen move. And I think it was a knee-jerk reaction to what was now seen, and it's marginally more dovish. But I think the Fed could have come out and said, look, listen, let's look at this inflation data. It is sticky. We're all worried, as Scotty was just before, on the Australian economy, that things could turn, and they could turn very sharpish. But I think the Fed has to play what's in front of it and look at that data and go, okay, I'm thinking now, if we get a rate cut this year, we're going to be very lucky. And I think a lot of the market are in the same boat. So it's going to be very interesting to see where they do. So really, personally, I'm kind of looking to buy dollars on dips, but probably not against the dollar yen.
Yeah, all right. Yep. So what about the Aussie? How does it fare in this environment?
I think at the moment, we're looking at some of the terms of trade. They're not. It's coming in. We've got inflation issues as well in Australia, right? So I think that's the one currency that is probably going to remain range bound. Because I can give it good reasons for up and good reasons for the dollar going up. So I think we're probably going to be. It sounds very boring, but we're probably going to be trading in this wider. Maybe 63, 66 range for the next quarter. After that, I'm still in that dollar stronger camp. I think probably like Scotty alluded to before, that the Aussie market can change, and it can change very quickly. We're not a one-trick pony, but we're kind of close to it. So keeping an eye on those data, you've got to trade Aussie very hard on the data. If inflation starts to come off, I think it will come off fairly hard. And just, you know, being the micro guy, just walking around the streets, there's a lot of spare office space, there's a lot of spare retail space. It doesn't feel like we're in a buoyant economy at the moment, even though inflation's telling us we probably are.
Okay, Nick Twidale, thank you so much. Great to have you on. Appreciate your time.
Thank you.
And that is the trade for today. Be back in just a tick.